Welcome back to Cheddar, everyone. Vizio, a company well known for its smart TVs and soundbars, has officially gone public. Vizio is selling investors on a plan for the future as more and more viewers gravitate towards streaming, and they priced their IPO at $21 a share. They're trading under the ticker symbol VZIO on the New York Stock Exchange. Take a look at where they ended on the day. Ended at about $19.13 a share. The stock began trading at $17.50 a share, and so it moved higher towards the end of the session at $19.13 close here, roughly $19.41, somewhere in there, based on our charts here that we're tracking on the day. But earlier today, I spoke to Vizio CFO Adam Townsend about why the company chose to go public right now. Take a look.
Vizio has a long history and an established brand in the device business, so around TVs and soundbars. And now we're moving in more and more to the media space where we are becoming an advertising business and a platform-driven business. We're bringing the solution of an integrated software platform onto our TVs to allow consumers to access the content they want across subscription video services, AVOD services, and even free channels. We offer consumers hundreds of free ad-supported channels right on the platform in one place. So it's really exciting for us to be able to tell this story and help people understand where we're going from here. The IPO structure was something that we looked at. We looked at a variety of ways to bring this story to the market, and we really felt that this was the right one for us. It fit our needs, it fit our founders' expectations, and it allowed us to get out on the road, talk to investors directly, and really help people understand what the future of Vizio looks like.
Certainly. Your company has long been established for TVs, soundbars, but as we are immersed in streaming right now and more people are cord cutting, how has Vizio's strategy changed, and where do you see the best opportunities, especially when you are looking to accelerate some of your margins and show investors that you can maintain them and that profitability in those specific categories over a long period of time?
Yeah, look, the company, like you said, has had a long track record in the hardware business, and that's really a point of sale business model, single revenue source. We're now moving more into a dual revenue structure where not only do we make money when someone buys a TV, but we're making revenue when they use the TV. So whether it's watching ad-supported content where we partner with advertisers to bring effective, relevant ads to the platform and reach those viewers, frankly, those viewers that are getting harder and harder to reach as they come out of the traditional linear world. So to your point, as people cut the cord, they're spending an increasing amount of time on platforms like ours, and advertisers really want to get to them. So we partner with broad ad agencies, brands directly, and bring their message to consumers. We think that changes the economic profile of the company significantly. Our gross margin on our platform business is around 70%. That is vastly different than what you might think from a consumer electronics part of the business. And so as that complements the overall mix of the company, we have more financial flexibility and stronger profit growth.
It's truly remarkable to hear about, and perhaps just further signifies the time that we find ourselves in, as you're stressing that television advertising is a big part of Vizio's future. As more viewers use streaming apps, that strategy, how do you see that playing out through some of the agencies that you're working with, and how will you be able to measure these ad sales on your newer platforms?
Yeah, great question. So as a result of our integrated software in the device itself, we have data that helps inform us about not only what consumers want to watch so that we can source content for them, but also what advertisers are looking for in terms of delivering their message. So addressable advertising, targeted advertising is really the future of where this is going. Linear advertising has limitations to it in terms of getting the right message to the consumer, and we can partner again with the folks that you just mentioned to bring those addressable advertisings onto the platform. It's really transformative, not only for us, but the ecosystem at large. The way that media companies are distributing their content is also changing dramatically. You see it by the likes of Paramount Plus launching, Discovery Plus. All of these content companies are finding a way to get more direct to the consumer, and the connected TV or the smart TV like ours with the embedded software is that pathway into the home.
Okay, and so I want to talk about hardware and then pivot back to the operating system as well, and perhaps they're a little bit more intertwined. But just diving right into it, on manufacturing right now, are you experiencing any headwinds given the fact that we've seen this global chip shortage impact everything from auto manufacturing to smartphone manufacturing as well, and even some of the popular gaming systems and consoles over this past holiday season? Does that bleed over into the television segment and some of the other products that Vizio has, and how do you move through that with some of your partners?
Yeah, look, our team works incredibly closely with our suppliers. We partner with the largest manufacturers in the television space in the world. They have incredible scale, incredible resources, and we think that that allows us to have more consistent supply chain. We talk to them almost every day. We're very close with them, and at the same time, we're close to our retail partners as well. So we make sure that that supply is coming from our manufacturing partners all the way to the shelves where consumers go and purchase Vizio products. So it's an incredibly important part. It's what my team looks at. We look at it from a risk management standpoint. We want to make sure that we continue to have supply to meet consumer demand.
And the hardware is so key because of the SmartCast operating system as well that's within this broader Vizio environment and ecosystem, if you will. And so with that SmartCast OS, the face of Vizio's streaming experience, what is it offering that streamers cannot find on competing platforms?
Well, I think the real important point is that it's an integrated experience. It's all in one place. You don't need to plug something in, have more cables hanging off your TV, have an extra remote control. It's embedded in the television for that seamless experience. All the content on the platform right when you want to get to it. And we think that that's really where consumers are going. We see smart TV growth accelerating. 30% of US households today still don't have a smart TV. They may be seeking streaming and using an external device to solve that, but we think that over time, they're going to want to move to where we are. We've invested in the software to give them that great experience, and we're going to continue to bring innovations and more content right there on that platform.
Our thanks to Adam Townsend, CFO over at Vizio.